Let's bring in Christopher Peel, Chief Investment Officer at Tavistock Investments. And Karen, you covered a lot of really interesting Chinese stuff at the wall there, particularly the data around the trade story. Chris was just telling us you're excited about the Chinese equity proposition as well.
Well, we've been looking at ways to play the U.S.-China trade talks, and one of the things that became clear to us toward the end of last year was that, you can play it from the U.S. side, which was virtually at all-time highs, or to play it from the other side of the telescope, where the Chinese market backed off almost 50%. So I think, the refreshing of the trade agreements globally is a positive for global trade going forward, but especially in the case of the China-U.S. trade. So, I think Chinese domestic equities, still are cheap, and they were really cheap earlier in the year. And I think the recovery or the rally has further to run.
And we've seen some pretty weak autos numbers in there. Do you see the auto sector as still a bellwether for the economy, or do those numbers not really make sense in what you're seeing?
I don't really fully understand the Chinese auto numbers, but I think taking a step back globally, the world is changing. The demand for cars as we've known it is changing because there are alternative methods of transportation or car ownership sharing, the ability to a zip car in London. You don't need to own a car anymore. So I think car ownership as a percentage of households will change, certainly in the developed world going forward.
How do you manage the political backlash and the risk then in putting on that trade? Because it's a plain vanilla long trade, you like the market, you buy Chinese equity, but every time Donald Trump gets on his Twitter account to throw another missile on this trade story, we see some setback on the daily trade. He's not going to like these latest trade numbers, which show a much bigger surplus than the market was anticipating. Do you not worry about the impact on your holdings?
Well, the thing is, I tend to look at, and I don't really believe China is an emerging market. It's far from that. But the key to being successful in emerging market investing is to look for political stability and positive GDP growth. That's what we've got in China, with or without these trade talks. I think getting them, beyond where we are will lead to a new playing field with more certainty, which will benefit, I think, both the U.S. exporters to China and also the Chinese exporters to the U.S.
To Neil's point, I mean, that auto number is confusing. I buy into that because we've got so many other things going on with the ride-hailing story being as strong as it is in China and so on and so forth. But the big opportunity was perceived to be the shift in the economy to consumer-led consumption and strong purchasing power with consumers who haven't taken advantage of their slowly filling wallets over recent years, but now they've got credit, they've got the availability of credit, they've got more money in their pockets. Do you not worry that maybe those data points that Neil is looking at suggest that actually the consumer may have the cash, they just don't feel confident enough in Xi Jinping's China to spend it?
I think there's a huge amount of wealth creation in China at a holistic level, and it's low per capita, but it's increasing, at a rate that it's going to roll up to a huge number going forward. I don't think the Chinese consumer is stepping off the pedal in a meaningful way. It's just hard to see it through the data itself. At the high end, I saw the luxury goods, LVMH numbers yesterday, the day before, were fantastic. There's no sign that they're still not wanting to consume at the highest level, but the evolution of that economy is growing, and people becoming wealthier and wealthier, but albeit from a very low level.
I guess just another question on the data, sort of top down. Do investors have the same faith in the data? This is a very, very large, complex economy. Do we have the same trust and faith in it? Do we look at it directionally, and is that an opportunity for those who can dig deep, can understand it?
The data, if you believe everything that you read, the data is unreliable. But the question I always like to challenge things is the data distorted to the upside or the downside? or is there any type of, what is the pattern? I don't really know. All I know is that it's the second biggest economy in the world, and you just have to look at the demographics. It's changing and changing quickly, and it's probably early in the changing phase to move it to a market economy. It's got a long way to go. So as an investor, I'm trying not to fight it. I'm trying to embrace it, and just looking at the Chinese economies. I think the changes within the MSCI, indices is a big deal from the equity part, but also in bonds. So I think there's as an investor, philosophically, if you get the China call right, and all of the tributaries that run off of it, and the North American trade right, well then you're most of the way to where you need to be. So I think there'll be more and more fund management houses like mine who are focusing very, very heavily on the Eastern economies on a forward-looking basis.
I'm curious about that MSCI story, because in the past we've seen a little bit of movement as investors have baked in that further inclusion in the emerging market index. This time round, the news flow coincided with some very negative news on domestic China and the trade spat with the US. Do you think if we finally clear some of those hurdles that investors will unlock some of the potential? Is that where you see that further room to run, because investors are sort of standing back, but they are inclined to lean into China because of that inclusion in the index?
Well, they're being forced to really do the analysis themselves, because when it was a very small or negligible part of these indices, you didn't have to really have a strong opinion on it. But now, as the percentage of the index more and more encompasses Chinese domestic equities or bonds, you can't ignore it as an investor, because it's too big a position off your benchmark.
Do you feel like you have the right visibility though? Because a lot of these are mid-cap companies now in China, not large-cap companies where you can access the information. How hard is it to have the transparency on some of these names that have just been dragged into the index?
The answer is it's very difficult. I think there's going to be, you're going to learn by feel and going to make mistakes, but the fact is that the Chinese government has a clear mandate to open up its economy, and these are some of the first steps. So as an investor, you can't fight it. You need to really, to the best of your ability, do your own work. And the difficulty thing is, if you read 5 economic investment bank views, you get a different angle on the same data series. So it's hard as an investor.